Hi there, and welcome to another edition of Ask Squirrel CPA. Today we're talking about when should I incorporate, and I have Yahweh with me here again. So Yahweh, how many days we got before the end of T4 filing deadline? We're coming right up on it. Okay,
Three more days.
We're gonna get it done. So, but the quote that I have, regarding to when should I incorporate, it's from Zig Ziglar, and it says, "If you got the wrong plans, I don't care how many positive qualities you got, you're going to end up in the wrong place." The statistic here is we have, the highest personal rate in Alberta is 48%, and the small business rate is a fantastic 11%, and you can only capitalize on that if you're incorporated. And the story is business owners, they often end up paying more tax than it would cost them, the extra cost to incorporation. They avoid incorporating because of the extra costs, and in it they end up paying more tax than it would actually have cost them to incorporate. So Yahweh, what do you think are the questions that these business owners should be asking when deciding to incorporate?
Well, first of all, what is another term for unincorporated businesses, and how do they file taxes?
Yeah, so the other alternative to an unincorporated business, it's a proprietorship. And the proprietorship, unincorporated business proprietorship means the same thing. They file their taxes in conjunction with their personal return. Mm-hmm. So it's a schedule, a T2125, Statement of Business and Professional Income, and it's an extra schedule to your personal tax return. That's essentially how they file taxes. We normally use single entry accounting, which just gets the totals in various categories by the client and go through them with them on what's deductible, what's not, are we missing anything. But it's relatively a simplistic process, and it's done in conjunction with the filing of their personal taxes.
Mm-hmm. What is the main advantage of unincorporated businesses?
Yeah, you're hard pressed to find too many advantages. The main one is that it's cheaper. Mm-hmm. So it's cheaper to do the work for for an unincorporated business. Like I said, it's just a schedule on your personal tax return. We're normally just looking at totals in various categories that have been prepared by the business owner. With our guidance, we give them the categories, and they prepare the total. They calculate the totals in each of those categories. So total revenue, mm-hmm. total advertising expense, total office supplies, total travel expense, and we work with them to find the right deductions and make sure there's nothing missing. But it's a relatively simplistic process than going through the incorporation process and doing formal financial statements, corporate tax return, T4s and T5s, personal tax return, and some tax planning as well.
Right. What aspect of CPP surprises most unincorporated business owners?
Yeah, so we go back to the tax rates. The highest personal rate is 48%. And your rates go up until you hit the highest bracket. And usually, business owners are pretty sophisticated. They go online, they start looking at how much I'm making and what are the tax brackets on that income, and they come up with something. And then they're completely blindsided by CPP. Mm-hmm. So they have to pay their tax, but once you're operating an unincorporated business, you have to pay CPP as well. So the same CPP you paid as an employee, now you're paying both the employee and the employer contribution. Mm-hmm. So if you ever had a job and you had CPP deducted off your check and you paid $2,600 in CPP roughly for the year as the maximum, as soon as you're running your own business and your proprietorship, you don't just have to pay that employee portion, that same $2,600. You got to pay the employer portion too, which is another $2,600. So approximately $5,200 in addition to that tax that you so meticulously calculated, and that's usually what they're blindsided by, is that extra $5,200, and there's no way around it unless you're incorporated.
Okay. At what profit level do the tax benefits of incorporating normally outweigh the cost?
Yeah, there's some secondary considerations which we'll get into here too, but the first thing is we just look at it, is this cheaper? Is it just cheaper for you to be incorporated or not? And there's some considerations, but I put a general rule out there, and the disclosure, this is the general rule, doesn't work in every situation, but if you have $50,000 of income, and that's income before you pay yourself as the owner of the business. So after you've collected your revenue, paid your business expenses, and you have $50,000 or more of income left over, you should really look at being incorporated. You're starting to get in that neighborhood of you're paying, tax plus $5,200 with the CPP. $5,200 can go a long way in a new business. Yeah. in terms of what you can do with it. So I would say, at about $50,000, normally the spreadsheet is going to tell us that it was actually cheaper for you to be incorporated, even considering the the extra cost of maintaining that corporation once you factor in the tax savings.
Okay. How does incorporating help protect your personal assets?
So you have what's called limited liability once you're operating through a corporation, and it's not absolute. But what that means is you're conducting business in a separate legal entity. So if that business, creates a loss or damages and it gets sued, they're suing that business. They're suing the assets inside of that business. And it's much more difficult for them to get to the business owners, and specifically they can really never get to the shareholders. It's can they get to the directors of the business? And a small business, usually the shareholders and directors are the same. But can they actually, get to the directors personally? It's not that they can't. It's just extremely unlikely that they can. So, if you make a mistake in your business, if something happens, if you get sued and there's a damage, they're looking at the assets in the business, not at your personal assets. And people sometimes think that, I don't have any risk. It is never zero. It's never zero. So it's just, and if you think it's zero, you're not thinking broad enough, because have you ever gotten to a car to drive to anywhere for your business? Well, guess what? You could have got sued for that in conducting the business. So even if maybe you're a graphic designer, that's really kind of low risk, as opposed to maybe a plumber who can cause a big leak in a building. That's really high risk type of thing. But we look at what that risk factor is, and it's never zero. You have to be honest with yourself. There's always something that can happen, even if it's just driving the car.
Okay. Does registering a trade name offer the same protection as incorporating?
Yeah, so I don't claim to be a trademark lawyer, but everyone that I've ever went to, and every time we get advice on this from a client, it always comes back the same way. Is if you want to protect a trade name, you should incorporate that name. That registration that you file at corporate registries, it's more of a placeholder. So people think that they go and they pay their $20 or $40 at corporate registries, and they register a trade name for their unincorporated business, and that gives them a legal right to it. We've been recommended to us on several occasions that if you want to protect that, go and incorporate that name, because that person who goes and incorporates over top of that trade name, now they have the legal right to it, and not the person who registered the trade name. So if you want to have a legal right to that business, that trade name, you want to incorporate it. So if that trade name means anything to you, that's a consideration on when you should incorporate.
Okay. How can incorporating help you get WCB coverage in Alberta?
Yeah, so we run into this trap sometimes, a lot of it in the construction industry, but it can be in other industries as well, is WCB, in Alberta, they basically have a policy that they want to issue the coverage to who they call the prime contractor. So let's say you're not working for the end user themselves. So on a construction project, for example, you're not working for the homeowner, you're working for a general contractor, and the general contractor has a relationship with the customer, and you work for the general contractor. WCB will take the position that general contractor is the prime contractor, and they'll say that you are ineligible for WCB coverage as the subcontractor. And this can happen on a Suncor site or whatever you're happening. They'll say Suncor should get your WCB, and Suncor turns around and tells you, we're not going to give you the job unless you get WCB coverage. So the way around it is you incorporate. Once you incorporate, WCB has it written administratively into their policies that they'll give you the WCB number, and they won't query who's the prime contractor anymore. So sometimes it's just a necessary evil in order to get WCB coverage in Alberta.
Will banks issue business loans to unincorporated businesces?
I don't want to say it's impossible. I just want to say I've never seen it. So I've never seen any loan of any substance, other than maybe a credit card that's branded to the company. Nothing of any really high value that's going to be issued. So if you need to get a business loan of almost any significance whatsoever, you're going to want to incorporate, because the bank or other lending institution is going to insist that you're incorporated. That's just the law of the land.
Why do some people and companies refuse to hire unincorporated contractors?
So if you've watched one of our other videos on contractors for employees, you know that all the risk, you know, is when people hire unincorporated contractors. So when they hire unincorporated contractors, they're always worrying that that unincorporated contractor could be deemed their employee, and usually for that could make them have to repay payroll remittances, tax, CPP, and EI that they should have deducted off that check, and do so retroactively long after that contractor is gone. Also, they can be, deemed an employee for employment law purposes, and then they're, entitled to vacation and severance pay and other employment benefits like that. So, in order to avoid that risk, they just take that blanket policy to say, hey, we're not going to hire unincorporated contractors. So sometimes in order to get the job to begin with, you have to be incorporated. Also, there's a kind of a bit of a perception thing too. So even if it's not a hard no, but sometimes they just like, oh, this guy's not a real business. He doesn't even take the time to incorporate. So do I really want to do business with them? So there's a bit of a perception thing that can come into play, but it comes down to sometimes you just won't get the job unless you're incorporated.
Mm-hmm. Well, that case, do most unincorporated businesses go on to become successful businesses?
Yeah, so my public practice career has spanned more than a decade now. The firm's been around for more than 8 years, and we start going back to the history of our unincorporated businesses and which ones really graduated from being an unincorporated business to a really successful business, as opposed to ones that just said they jumped in with both feet from the day one and said, I'm going to incorporate from day one. How many of those became successful? This has just become a learning process for us, that most people who do not incorporate, they don't jump in with both feet, they never really get that law of inertia going. Getting a business going at any scale, it requires a tremendous amount of effort. And if they don't jump in with both feet at some point and just take the plunge, it never really happens. So really, when you're not incorporating a business on the offset, you're really saying that, well, it's I'm okay with the risk that it's going to be, but B, and probably more importantly, is this is more of a side hustle than a business that I want to grow, because you're kind of admitting to yourself that I'm not really going to put in the required effort to get to $50K a year, where it becomes a no-brainer anyways. So or to a point where I really care about the brand that I should be spending hours and hours to build. So just anecdotally, we haven't seen a lot of success for business owners who I would say, tiptoe into the water and do so as an unincorporated businesses. The ones who tend to succeed are the ones who jump in with both feet, and they exert that kind of effort to get a business rolling, right? Which takes a lot of effort. So if you're looking for if you want to take the islands, you got to burn the ships. Most businesses that are successful, really just take the plunge and incorporate, because they're kind of betting on success rather than betting on staying small. So I think that's what we have here today. Thanks again for tuning in. As always, if you hit the like button or subscribe button, it'd be much appreciated. And if you have any questions, please leave them in the comments below, and we'll do our best to address them in future videos. Thanks very much.